What's going on?
Nothing much, nothing much. How you doing?
I'm good. How are you?
Doing good. No complaints. Let's see. Mm. Right. Let's see. Hey, what's going? Hey, Destiny, since you're the first one here, if you have any questions, you can ask. Just looking at some charts.
Okay, cool. Right now I don't, but
Okay. Well, I'm about to. I guess I'll wait a few minutes to see if anybody else have on before I go over this part. Let's see.
Yeah, I'm listening now. He ain't really saying nothing, but he on it. No. It's not that loud.
I'm gonna start at 8:20. All right. So listen, for today's session, I want to go over support resistance. I want to go over one of my strategies I use for finding quality options using support and resistance. All right. And I'm going to go over my favorite ETF to trade options with. All right. So I got my trading view set up right now. All right. Just to kind of go over what I have on the chart. When I'm looking at setups and I'm trying to find entries. All right. So when I'm looking at entries, I'm looking for quality prices to enter in at. I'm looking at the 1-day chart. All right. Then I have the EMAs, the 21 EMAs, these lines right here, when it comes to finding like long-term entries for like options that I might be in for like a year and a half. These two, this one isn't really important. This is more so for day trading. But like the 50-day moving average is something I can use, but it's really the support and the resistance is the most important. All right. So I'm going to actually backtrack and I'm going to go back to some entries I entered in last year. The XLK. So last year, when I was looking for an entry, right, I started my support. So support, when you think of support, it's like the seat I'm sitting in, it's supporting me, keeping me up, right? So you want to look for areas where the stock is hitting and it's bouncing. So this area right here, which is around the 109, I noticed that the chart bounced a few times here. It bounced twice, right? And then it went up. So I actually was waiting for XLK to retest that 109 area. And it retested. So the first 2 times was around September 21st to 22nd. And then it actually tested this area again around October 30th. So I entered the contract here because I noticed this was an area of support, an area that it kept testing. And this is around the time last year when like the market was kind of like on a downtrend. So I essentially I was patient and I waited for it to kind of hit that area. So it hit that area, right? And I essentially rolled this one up, and I used my RSI down here. So the RSI is, it's the relative strength, right? So the relative strength is something that it's a technical analysis that you can use for your entries and exits. All right. So when the RSI is down here around this 30 range, this is the area where essentially investors are looking to buy a stock. When it gets up here, this is when people are looking to sell. Okay. Because this is considered overbought. And this is kind of like what I consider a profit taking area. So once the RSI gets here, it's a profit taking. And this is kind of like an area where you enter. So you notice right here, I bought my contract in October and I sold it in April because it was close to that, being in that overbought range. And I sold it right here. And I was happy I sold it because if you notice, it went from the stock being 143 April 19th to it being 133 May 12th. So I'm like, all right, I'm good. Right. And you notice this, it didn't hit the area that I sold it at until June. Right. Looking back, the second time it hit here, this could have been another entry and I could have wrote it up again. But I just wanted to show you an example of how you can use the support and resistance. All right. And I'm going to fast forward until now. All right. So fast forward until now. We're at this part of the year and XLK hit 175. So just to break down XLK, let me show you the holdings for this one. Because this is actually a good ETF that you can have in your long-term portfolio as well as options. All right, so XLK, I'm looking at the holdings. So you notice this one is 21% right here. This is the top 10 holdings. It's 21% Apple, 20% Microsoft. NVIDIA, this is like one of the top chip makers, and we know how big chips are in this country right now. We need chips for everything we use, from cars to laptops to phones, you name it. Visa, PayPal, MasterCard, Adobe, Intel, Salesforce. So it has like some of the top companies are in this ETF. And the biggest thing for me is that it's 20% of the stocks in that ETF is Microsoft, and 21% of the stocks in that ETF are Apple. So you just essentially count on Apple and Microsoft to do very well, because since these have the biggest percentage, these move the ETF more than say a NVIDIA, right? It's only 4%. So whichever stock has the biggest percentage has the biggest impact on that ETF. I love doing stock option trades with ETFs. It's just a safer way to trade options, because you're counting on a collection of companies versus just one. And as you see, looking at the chart, this one moves. Just look at it. I mean, last year was 109, right? When I entered. Look now, it hit 175. So when you got Apple and Microsoft, that's quality. That's quality right there. That's gonna help you move forward and make some money. All right. So I actually had re-entered a contract around 921. So let's see, the price was 153. The price is 153. I actually had sold this one around, let's see, I bought it at 153. I actually ended up selling this one like around 168 because it was overbought. And like, I'm real conservative when it comes to these the RSI. So once I see it's overbought, especially here, this one broke through. This was a more aggressive than I usually do. Usually once it gets close to that line, I sell, but I let it break through this time and I sold it. And as you see, I sold it around 168 and it kept going up to 175. I'm all right. I still made profit, right? And I entered at 921. So I essentially got out within 2 months. All right. So now what I'm doing now is I'm looking for new entries. I'm looking for new entries into XLK. And with this entry, I'm actually looking to go longer on the position. I'm looking at some January 2023 contracts for this one. So what I'm gonna do is I'm gonna chart support and resistance again. All right. So if we look at this stock, right, what I like to do is I just start hovering down until I see two sections on the chart where I have candlesticks that are touching. So resistance, I'm looking for areas where the stock went up and then it bounced back down. But I'm not going to force anything, if that makes sense, right? So right now, it's not really any strong areas of resistance. We see it hit 175, right? It hit it one time. So I'll be looking forward to test that area again. Okay. I'll be looking forward to test the area again, because if you only got one candlestick, that's not resistance. Because look, it could be just because it hit 175 here and then it bounced back down, the next time it can completely blast through that 175. So for it to actually count as resistance, you would want to actually see like the candles hit up to 175 and then bounce back down. All right. So more importantly, than resistance, I want to be looking for support. So support, like I said, support is like, you know what I'm saying, I'm sitting in this chair, support me up. I want to look for some areas where the stock has hit and then it bounced back up. That could potentially be an ideal area for entries. So right here, if I hover right here, I see that it hit a low of 164. Right here, it hit a low of 164. Right here, it hit 163. It closed on 165. And then right here, it hit 163. So this is a nice little area right here. So we got about, you know, when it gets, if it's like the 163, say it's 163.85, the next one 164, that's good enough for me. So this is the area of support that I'm looking for, right? That I'm looking at right here for potential entries. So let's see, this one was 164. Let me draw this line right here. Oops. Make this a little bit more skinnier. So look, this could be a potential area where it hits here and I could be looking for entries right here. Okay. So what I would do is I would make my contract whatever that 52-week high is, right? So for example, if I'm entering right here, if it comes here, say this stock hits here and it starts to like consolidate, like it wants to bounce from here, right? That means it's support. Then I'm going to be looking for like 175 calls for January 2023. If you don't want to do a year out, maybe you can do a September 2020. I'm sorry. You can do a January 2023 or like a September 2022, right? So, but I want to see if this level holds the support, right? So I'll be waiting for that, and I got the support line, right? I'll also set an alert, 165. All right. So look, it'll notify my app, send me an email, so I'll know. So the next thing is, what if this stock comes down and it breaks through? So you want to be ready for that too, right? So what I would do is I would look for the next area of support. All right. I'll be looking for the next area of support. So what I see here is around this level, you see some nice, you got a question, Destiny? What's up?
Yeah, so I'm trying to follow along with you on my trading view. And my candlesticks, like, they look very small. Like yours is like spread out and mine's not. And I'm usually pretty versatile. Yeah, I'm using those. And it's on the day chart, but it's like real small. Like I can't do nothing with this. And it's and it was just for this one. Like when I was looking at another stock, it was regular, but
Mhm.
for XLK, it's like very, very small. And I was trying to see if you could help me figure out how to make it bigger.
Well, you
Or
can
if I
like,
could.
if you go here, you see where I got at the bottom where I'm at the dates.
Mhm.
You can like widen it out, or you can come here and you can like
Yeah,
spread it out.
yeah, I did that one.
Or you can just zoom into it too though. You just, you know what I'm saying? Or you can
How
zoom
you,
out.
how you zooming? What are you doing?
I'm just using the mouse. I got this I got a zoom in feature on the mouse I'm using.
Oh, okay.
Are you using the mouse or using your fingers?
I'm using the mouse, but I don't have a feature. I'm just like, going up and down. I think this is the zoom feature. But I mean, we can figure it out afterwards. I don't want to hold
Let's
up
see. So
everybody.
you got the 1 day chart, right?
Yeah.
And then
Can I show you how it looked?
yeah, hold on. Let me finish this last part real quick.
Okay.
All right, so for example, if this is coming down, this is the first support level that I established, right? Because I see that it hit here around this 164 level, bounce, went up, came back down to that around that 163, 164, and then it bounced again. So this is a nice support level. So like I said, you want to, for this to be a support, an official support, you would want to see the ETF come down around here, and then you would want to see it looking like it's getting ready to bounce back up. All right. But what if it breaks through? So you will want to have your second level of support, right? Your second level of support. So I see here that we see that here it was kind of consolidating. Consolidating is when the stock is kind of moving sideways, stuck in a range, like it doesn't want to break through that range. This would be considered another level of support right here because it kept testing this level and it didn't break through. So I would make this the next level of support, which is around that 159.84 level. All right, so we have that, and this is an old level of support from September. I mean, I don't expect it to hit that, but if we did, I usually I'm trying to, let me see. Actually, I'm going to show these right now. Those are old levels. The thing about old levels that you use for like previous entries, I usually try to remove those, or you know what I'm saying? Like we don't need those right now. It's just we don't want too many lines on the chart. All right. If it broke through both these levels, then I'll be looking for additional levels. But right now, let's just keep it simple. Let's just focus on these two. So it hits this 164 level. Once again, I'm looking for the 175 cost. And if it hits here, once again, maybe you can the 175 cost will still be solid. If you was doing a contract that's a year out, the 175 is cool. If you're only doing it like 6 months out, a 6-month contract, I would make my strike price closer because you have less time. But I believe that it's better to do at least 9 months out. 9 months out to a year for the contracts is a better way to go. It's safer. Plus, you get larger returns. Since I've been doing these ETFs options with XLK, I haven't seen anything really under an 100% return. So if you just let this thing bake, you let it ride out for a year. Now you should easily do 200 to 300%. I mean, like I said, you're essentially riding on the backs of Apple and Microsoft. So you should be good. Let me look at your screen real quickly, Destiny, just to kind of see what's going on with that.
Oh, I fixed it. We good.
What was the issue? You just had to zoom in?
Yeah, I had to keep going, like scrolling down on the right hand side.
This one?
Yeah. I just
Okay.
wasn't going farther enough.
Got you. All right, bet. All right. So just let's look at some prices right now for this contract. All right. All right, so barchart.com this is a area. This is a website I look at for looking at contracts, for stock option contracts. It's pretty solid. You can get like price history of contracts, things of that nature. So on the left hand side, I'm gonna scroll down to option prices. So I'm looking at the January 20, 2023 contracts. So look, we're looking at the 175 contract. And look, this is something that I like looking at. It can kind of give me an idea of how much I can make on a contract. So currently right now, the contracts are being bidded at 15.10. They're asking 16.45, right? But listen, you know what? All right, cool. So make sure I can still see my screen. All right, so currently for the 175, they're being bidded at 15.10. They're asking, looking at Thinkorswim, they're asking this right here, 16.45. Let's look at what the contracts were just even yesterday for 175 costs. All right, let's see. Let's actually go back here and look at the 52-week high. So it hit the 52-week high of 175.28 from the 13th. So yesterday the contracts was going for, they opened up at 1,700. Today they opened up at 1,500. So that's like $2,000. That's a $2,000 difference right there. All right, that's a $2,000 difference. So let's look at what the contracts cost when it was around this 163 level. So it was at 163 on December 3rd. So let's go down to December 3rd. Look, they was at 14.25. So that's a $3,000 difference. Look, that's a $3,000 difference right here. 14.25. Remember, 14.25 for options. You got to times that by 100 to get what the actual price of the option contract is. So 14.25. I'm just doing the math, walking through somebody who, you know, who's new to options. So that's 1,425. So look, just on the 3rd, if you got in, I'm sorry, I said $2,000 difference. If you got in on the 3rd, right? That's a $300 difference right here. That's a $300 difference right here. So depending on the number of contracts you have, right? Of course, essentially that's some more profits you can make. So these, when they hit the 52-week high, they were $1,749, which is $1,749, and these were $1,425. So that's a $300 difference over the course of 10 days. All right, so let's look at if you bought in when it was around this 159 price, which let's look at September 1st. I'm sure I got the dates right for that. August 31st. Yes. Yeah, let's see from, let's look at August 30th if it go back that far. So look, you got in August 30th at that 159, you got in for around $900. So you would have made an $800 profit per contract that you got. So what could essentially happen is if these stocks go back down to that price, you can essentially be paying that same $900. You can essentially be paying that same price. So I like to look at this. I'll go to bar chart and I'll look at what the contracts cost when it was at a certain price to kind of get an idea of what I could essentially be paying if I wait for it to hit those prices. If I'm lucky enough for that ETF to hit that price, right? So if it hits this one, because honestly, I wanted to hit this. I wanted to go back down to that 160 range, or even in the middle. Even if it kind of stops in that middle, I know I'm getting it for like around $900, $1,000 for that contract instead of paying this $1,500, $1,700, right? So that's something. This is something you can use just to kind of this is something you can use to kind of help forecast how much you might have to pay for a contract, looking at your support and resistance. All right. So let's see, just to kind of see how much the contract is worth that I bought in last year. So last year, around October 30th, it was 111. And I want to say I bought a 125 core. Let's look and see what a 125 core is worth. I just want you to kind of see. I remember how much I paid for it too. I paid 10. I paid 10.95 for January 2022 125 core for XLK. Just over $1,000. It wasn't even. It was just under 1,100. Let's see. It was January. I want to say it was January 21st. If you want to see order strike prices, you can just change this to show up. All right, so look, the 125 car that I paid $10.95 for is worth a little under 4,500 right now. So if I would have held it all the way to this time, my contract that was $10.95, I paid a little under 1,100, is worth about 4,500. But let's look and see the highest that this contract got to. I'm just showing you this because I just want to show you the benefit of holding a contract. Things with these options, just how the stock market works, as we've seen over the last month or so, stocks are going to go up and down. All right, you got different things that are going to affect the market from Omicron. You have government issues, you have supply chain issues, you have interest, but there are definitely benefits to just holding a contract. So let's see. So over the last 3 months, the highest this contract, let's look over the last 6 months just to, you know what? I don't think I have membership for that one. I canceled my membership. But listen, this one got to 49.55, so a little under $5,000. So that's a what, 400% return, I believe. Let's see. So that's a 400% return. I wasn't the, the best in math. I know stock numbers, but I wasn't the best in math in school. But this is a investment calculator I use just to kind of see. I just want to get my accurate return on what the max return could have been for that year. So after holding it for 1 year, let's look at a 300% return. So it was around 400%. It's actually bigger than that. So just holding it, if you hold the contract, that's a 450% return off just one contract, right? That's a 450% return off one contract. So just imagine if, say, for example, say you did 3 contracts. So the more contracts you make, the bigger your returns can be. 3, 2, 8, 5, $14,000. So listen, you would have made $14,000 off interest with that contract. And I'm gonna tell you right now, I believe this contract right here, you get this contract, say it hits, even if it hits 164, but just say ideally, because we wanted to hit that 159, 160 range. If you get, we set these alerts for this one, right? Say we got alerts set for 160 and it's 163, 64 range. We enter in around one of these ranges. We do a 175 call for January 2023, I believe this one could easily do 300% return at minimum. And if we get it down here for that $900 range, it could potentially do 400 to 500%. Because I'm gonna tell you right now, like I said, this ETF, for those who came in late, it's 21% Apple, it's 20% Microsoft. Right? Apple and Microsoft have been on the tear. Like these are two of the biggest companies that are holding up the market right now. Apple is approaching a $3 trillion market cap. It has the biggest market cap out of all the stocks in the stock market. Number 2 is Microsoft. These are two biggest companies. These are two big dogs. This is why I preach those companies all the time as far as having those in your portfolio. So doing the ETF that essentially carries those two is a win-win. We got a lot of big things that are being coming out this year. So Apple, they have their augmented reality glasses that they're supposed to be launching around the summer, fall, right? They haven't even announced. They have, if you just think about like the metaverse, Apple hasn't even announced anything about the metaverse yet, and for sure they're going to be in that. For sure they're going to be involved in cryptocurrency, right? And then it's also being rumors about a electric vehicle for Apple 2025, right? So when you have all these things, right, Wall Street is going to start evaluating Apple, and they're going to start calculating that into the price of Apple and what they should be worth, right? So Apple currently right now, let's take a look at Apple. Apple right now is currently at 174, hit a high at 182, right? Apple actually has a price target right now of $200, but they just got a new price target of $250. So the new price target for Apple is $250. All right. Microsoft was, this time last year, it was at $211. They just hit a 52-week high. This one is hit $349. The price target for Microsoft is $400. So you got a price target of Microsoft for $400. Apple's is $250. So right now we have a lot of issues in the market, a lot of things pushing the market down. So if these stocks fall to those prices, I would definitely hop into those ETFs for that January 20, 2023. It can be very lucrative. Even if you wanted to, the earliest I would actually go, because the only other contract is a June 17, 2022. That's too early. So at minimum, I would do the January 20 of 2023. All right. So that's XLK. Any questions about XLK? Or that anything I went over with that support, resistance?
No, so just to clarify, you were saying we're looking to get into XLK around 159 to 160, and then to get out at like 175, or find an option that's at 175.
Let's see. So let me go back to it.
Because my thing with that, when we buy options, I've noticed
I'm looking to enter, and that's a good question because I can elaborate on that part more. So I'm looking at enter between this range right here, between that 164 to 159. And for my strike price, I'm going to do the 175 strike. So I'm not going to sell it when it gets to 175. I'll be actually looking to hold this one at least 6 to 8 months. So say I get in January, I'll be looking to hold this one at least until August. At least until August. Usually, because the only reason I'm saying August is because usually in September is usually the time of the year that the market tends to take a drop off. Like every September, like the market just drops. So I'll be looking to hold around that August time frame.
Okay.
Yep.
And I've noticed with options though, the break-even price be like way higher than what, like, so if we trying to target 175, the break even to be like 180 or sometimes, like, is that normal or is that just for certain stocks where it's like the price needs to be at least it needs to be higher than what you're even expecting it to get to in order to make money, right?
Right. So depending on like your break even point, like if the shorter the contract, the break even point tends to be like farther out. For example, let's look at the break even point for let's see. I'm about to share my screen. But yeah, ideally you would definitely want to surpass that 175 range. So y'all see my Thinkorswim?
Yep.
All right, so this is my paper money. You know, I still trade paper money just to play around with it, test out different strategies, things like that. All right, so right here, if I did a weekly contract for 175, my break even point is 169. Actually, let's go to this Friday is the 17th. So my break even point on here, and you know what? These break even points might be off because the market is closed. Let me see. Let me go to another one. Let's see. 169.55. I'm just looking at something real quick. 192. All right. All right, yeah. So look, so this week, right? So if I did a weekly contract right here, where this red mixed to green, this is the break even. So the break even point for this one is 175. And then for ETF to make like a $6 move, usually, I'm gonna be honest with you, usually that's not a normal move for ETF during the daytime. For it to make like a $6 to $8 move, you would have to have a lot of volatility like we've been having these past few weeks for that to happen.
Mm-hmm.
All right. So let's look at the one we want to do. So the January 20th, 2023. So look, the break even point for this one. Actually, let me see. January 20. All right, so the break even point for January 20th, 2023 contract is 192. That's if you held it all the way until that January 20th, 2023 date. But the thing with the options is you never want to hold it all the way until the expiration date. You want to be looking to get out.
Right.
All right. So with the options, even with these contracts that are a year out, you have theta. So theta is time decay. So the farther the contracts are out, the less that time decay is going to affect you. It's going to be so small you won't even notice it. But when you have like a shorter contract, like a contract that expires in like 1 week, that time decay is going to kill you because your contract only got 5 days. So if your stock isn't moving up, you say you buy a contract for XOK this week, saying it's going. Hold on a second. Say you hit you do a contract saying XOK is going to hit 175 this week, and it stays at 169. You'll lose money because it's not moving because of that time decay with the options. So that's why, like, I preach the long-term options. Like, it's a lot of money in these long-term options. Like, even for myself, like, I know I day trade, and it's nice money in it, but it's a technical skill that you have to acquire over time. I started off just doing long-term options. I just started off doing long-term options. It's a lot of money. It's the money is more I say efficient, less risky when you're doing like and I'm going to actually start calling them long-term options. They're called leaps. So leaps, LEAPS, leaps are the contracts that are a year out. Okay. Right. So That's that one. So yeah, we get it between this range. We can get this contract for like around that $900 to $1,100 price, and I can see this contract easily growing to $4,000, $5,000 by next August. So yeah, first options, leaps. You can't go wrong with XLK. Some other ones I like XLC as well. I like XLC. I think Destiny, are you in the XLC? Or is that somebody else in XLC that I was talking to?
XLC, no, I don't think I'm in that one.
Okay. Yeah, XLC is another good one too. This one's way cheaper. You say this one had a 52-week high of $86. It's currently at 76. It's currently at 76. So I'm actually gonna chart this one out real quick for you all, just to kind of.
We can't see it either. I don't know if you.
Oh, you know what? My bad. I was sharing that other screen. Thank you. So XLC, can y'all see it now?
Yep.
So XLC is another one that's good. Let me see the charts. All right. So Derek is in XLC. So XLC is another good one. We kind of look at support. Let's see, hit that 73 range. I don't see another area where that 73 is tested. I see another area right here around that 74 range. 75. So when I'm looking for support, I'm looking for two levels where it hit and then it bounced up, right? So you're going to look for 2 points. So if I zoom in here, I don't see this 73 range. Well, I see it hit here, then it kind of consolidated and moved sideways. This could be a level of support. Let's see, 74, and this is 75. This is good enough right here. So if I see like something like this, right, you got, it hit that 73 times, it hit 73, 85 like 3 times right here, and it bounced up. Even though it's not further apart, I do see that around the $74 level hit this back in May, and it bounced. Went on an uptrend, and it could essentially be headed back down here. So what I like to do for areas like this, I'll draw like a rectangle, and I'll make this the support. But I mean, look at it though. I mean, look, it hit 86, right? That's the 52-week high. What this is, enter your search term. I don't know what that's about. All right, so it hit 86. 86 times point. So we looking at it, it's about 10%. Actually, it's a little bit more. It's about 10 to 15% off from its 52-week high of $86. All right. So this is a contract. Let me see what an XLC contract costs. Because look, when I'm doing these option contracts, I like to get them on discount. This is how you make your money. And I mean, even when it comes to like long-term investing, you never want to buy at the high. You want to draw these areas of support where the stock has dropped, it tested those levels, and it bounced back up. You want to find those levels for your interest. This is how you get the most bang for your buck. All right, so XLC, if I did an $85 call for January 2023, the $85 call is only $300. If you did one for 2024, January 2024, you're talking about a contract with 766 days on it. So listen, the longer the contract, the more it can bake. You're giving it more time to bake. All right. Let me actually pull that up. So listen, the longer the contract, the more time you're giving it to bake. So actually, let me see. So let me actually go to barchart.com. Or XLC. So this one's solid too. XLK, XLC. Let me show you what's in this one. So look, XLC, look, you got Facebook is 23. Close some stuff out real quick. Right. So XLC, 23% of this ETF is Facebook. And then you got 11% is Google, Google, the A company, and then the Google Class C company is 11.16%. And then you got Netflix, Charter Communications, Comcast, T-Mobile, Disney, AT&T, Verizon. This one is pretty solid right here. This one is pretty solid right here. If I was looking at it, I would do a contract with, this is how I would kind of do this one. I would do a contract for January 2023. You see right here, it's only $310, right? I would buy one. And then I will also look at buying one for January 2024. So now you got two moving at the same time. I'm gonna buy one of each. And then if it dipped lower, you can just buy another contract. And you can actually average your option contract prices down. So say you buy a January 2023 contract for $310, right? And then say XLC goes down to $73, and then this contract costs $250. You can buy another contract for $250, and it'll average the two prices. So the 310 and the 250, it'll average the middle number for those two. So keep that in mind too. All right. So that's another one I want to show you. This one is actually pretty good to enter right now. This is a good price. So just showing these two. We got XLK, we got XLC. And we have XLK. So I'll be looking to enter XLK between that 164 and 159 price for XLK. Want to look at that 175 strike price for January 20th, 2023. Hold it until August. And then for XLC, it's good to enter now. I will do one contract for January 2023. I look at doing one contract for January 2024. And then if it goes down, you can average down. And those are two of the main talking points. So I want to go over some support resistance for finding contracts. I want to show you bar chart. All right, show you bar chart, how you can look up prices. And I want to show you the holdings inside XLC and XLK. And that is pretty much all I have for you all. So if you have any questions, we can do some Q&A if you have any questions. You can unmute yourself for that part. See, no questions? That's cool.
I had a
Hey,
question.
yo, I got a question.
Oh.
Oh, no, you
No,
go ahead.
No, you good, Abel.
All right, no, I was gonna say, now I noticed on Thinkorswim when you're doing day trading, you can trade up to 4 times a week before your account is marked as a day trader, and you got to put 25 grand in there to keep going. If you have like Webull and Thinkorswim, can you do like 4 on each or?
Yeah, you must. They only do that if you got a margin account in Thinkorswim. You must have a
Okay.
margin. You got to change it to cash. All you have to
Change-
do. All you have to do is email them, and like you can they customer service so good. You can literally just email them, hey, I want to change my account from margin to cash. And with cash, you can do day trades every day.
All right, cool.
Yeah.
And one more thing.
Mhm.
So if at the beginning of the day when the market open, you got those it'll show you where to close that, but then early in the morning you'll get that pre-market indicator where all the orders that just went in before the market open. Now let's say it's a huge gap in that. Would that be like a signal to also go in for like whether it's a call or a put, whichever way the pre-market indicator is?
You saying like say for example, it's a lot of people buying it pre-market?
Yeah. Like say I wake up one day, Apple at 170, like right now they're 174. Let's say I wake up tomorrow, the pre-market at 178. Is that a sign that it's shooting up?
Yeah, that can be a sign that it's shooting up for sure.
Okay. And if I put in the pre-market order, would I still benefit? Like if like sometimes I see things and I see it's about to take off, but as soon as the market open, it's like I'm too damn late. You know what I mean?
Yeah. So usually for that, let me see, kind of show you an example what I've done for something like that before. All right, cool. So say for example, I'm looking at like an Apple, right? And you said that say it closed at 174 and tomorrow, so like 178. So what I've done in the past, right? And you gotta understand like day trading, especially if you plan to open, it's extremely risky, but it's like high risk, high reward. So if it closed at 174 and I see it's 178 pre-market, I know that these prices aren't even valid anymore. These prices were based off it being at 174. So what I might do is I might predict what I think that the limit could be. So I'll make the limit price higher because it'll fill it at that price or lower. All right. So then I'll hit send. Or what I'll do is as soon as the market open, I change that to market order and then it automatically fills it. So as soon as that second, I'm talking about 1 second into it, you just hit review and send.
Okay. All right. That's what I was thinking about doing, but I wasn't sure, but you just verified that I would have been doing the right thing.
Yeah. You gotta be quick though.
Quick.
Like if I'm doing that, bro, I'm literally like as soon as I'm in profit, I'm going back. I'm buying in that market and I'm selling in that market.
Gotcha.
You don't have time to do that limit because if it passes that limit, it might not fill and it can start going back down, right? So you want to do a market order and be in and out.
Cool.
I'm talking about I might be in it. I'm in it for like less than a minute. Type of thing. As soon as you see it, as soon as I'm in profit.
I got one more question though, man.
Yeah.
It's just kind of like just an opinion, but I've been watching Apple. It's been trending up, and today it took the biggest dip. Have you seen any indicators of why that was today?
Let's see. Let me go to the chart. I kind of have some ideas.
Like I was hearing some news about some guy in Arkansas. He was Alabama, Arkansas, one of the two. He was a congressman, and he bought like $100 puts in Apple, and that shook a bunch of people up.
So, a couple of things going on here. So currently Apple is at an all-time high. So you're going to have people taking profit. That's one thing. It's overbought on the RSI. So even though it has a price target of 200, it's overbought, right? You're going to have people taking profit just because it's overbought right here. The third thing is tomorrow that Powell is speaking about tapering. That's the biggest reason why the stocks failed the last few days. People selling, taking profit because they want to see what's gonna come of this meeting. So with the tapering, the government is they stimulate the economy. They buy a large amount of bonds a month, right? So the whole point of them stimulating the economy is to push interest rates down. Interest rates is low. It's it encourage buyers. It encourages people to buy. You know what I'm saying? Mortgage loans will be cheaper. Auto loans are cheaper. They have smaller rates on there, so like it's easier for businesses to acquire loans, things like that. The economy is picking up, it's doing real good right now, so they're getting ready to basically end that tapering program. They're going to end stimulating the economy. All right, so originally they were supposed to be finished with the tapering program July of 2022. But it's rumors that they're looking to double the pace and actually be done with the tapering process in March. So what that'll do is that can essentially push interest rates higher. So when interest rates going back up, it'll make it harder for businesses to get loans. It'll push mortgage rates back up, which could essentially push mortgage prices down. So homes would be cheaper than they are now. Auto loans would be more expensive. And with that being said, when the interest rates can go back up, that is essentially looked at as just think, if it's lower interest rates and they look at that as something that can influence buyers and more people buying and purchasing things, they look at that as the opposite with the interest rates going up. So what's going to happen is they want to reevaluate Wall Street investors. They want to reevaluate some of these tech companies because higher interest rates can affect corporate profits, especially high valuation companies like Apple, right? So you got people taking profit out. Plus, you have uncertainty. People don't know how the market is going to react. So you got people selling because they're kind of scared, right? So tomorrow, Powell speaks at 2:30. Okay. So after that speech, I think that it's just kind of going to be a coin flip. I'm just kind of interested to see what the market's going to do. Usually around Christmas time, the market actually does great. You have what's called a Christmas rally. So like the last 8 days of the market is doing very good. And then usually also January, the first of the year, people are buying as well. So usually that Christmas rally, that week of Christmas, going into the new year, the stock market does good. That's just based on like historic data and looking at the market during the week of Christmas. And it does very well in January. Now, February, March, it sucks. All right. So I think those are some of the reasons why it dropped off. You got the federal, you got Powell speaking tomorrow. So people taking profit off.
Yeah.
Also, so yeah.
I got one last question. I hate to keep asking questions. I got one more.
No, this is what it's for. That's what it's for. Q&A.
All right. So I use your RSI method. It's been working for me in my paper trade, and it's great. But I've been trying to step my game up, and I saw. Do you ever use the supply and demand indicator? And if so, how does that work? What are you looking at?
I don't use an indicator called supply and demand, but that's essentially you can essentially use RSI for that. I look at it, so when it gets here. So you're talking about day trading, right?
Yeah, day trade.
So let's just look. So like I look at these areas as like sale zones. This is where people selling and this is where people buying down here. So you notice right here, CVS, right? It shot up today. Once it got overbought, I consider this a sale zone. Right?
Got you.
People sold off. And then it got down here towards the end of the day, it picked up a little bit. But let's look at some other examples. Let's look at another one. Let's look at Apple. So yeah, you can use support. I essentially use the RSI for that. Because
Is that your like go?
Is
Is that the only indicator you have up on there when you doing it?
I'll show you another one I use. I just want to say, because look, if you look at all these indicators, man, it's just look at all these indicators. It's so many.
Right.
So it's like, honestly, what'll happen is, man, you'll find that you might find some indicators that you like that I don't use. You know what I'm saying? That work better for you. So keep that in mind too. Even though I'm introducing these to you, you know, just keep researching and discovering, because you'll find something you like. So this is a perfect example right here. Look, on the 14th, this is a 5-minute chart. And this is good. Using a 5-minute, 15-minute chart is good for finding these areas where it's low on the RSI where you could potentially enter. So here, you see the RSI is low, and then look what happened, it picked back up, right? So this is what I would consider an area where people want to buy it at, you know? So you said supply and demand. So I look at this as a supply and demand area right here.
All right, that makes sense. Yeah.
Oh,
all right, thanks.
Oh yeah, the other one I use, the other indicator I use is, so I have support and resistance, and I'll also look at balance of power. So balance of power, it tells me if it's more people doing calls, buying it, or if it's more people doing puts. So how that works is, with this range, if it's over 0, there's more people buying calls. If it's a negative number, it's more people buying puts.
Gotcha.
Yep. So that's the balance of power indicator.
All right, man. Thanks.
No problem. Let's see. I had a question. Let's see. Can you go over what you did with CBS? All right. So transparency. I'm gonna go over what I did with CVS. Actually, how I messed up the trade with CVS today. All right, so I was looking at CVS on a 5-minute chart, right? So my whole watch list today was like, nothing hit on my watch list. So I'm like, all right, let me go find something else in the market. All right, so here, I literally was looking at CVS. I basically caught it after this big move up. So you see the first 5 minutes, it went from 99.47 to 100. Actually, it opened at 99.47. It dropped down to $99.25, and then it hit a high of 119. Right. So I actually hopped in here. I hopped in on the next 5-minute chart because I looked at it as a momentum trade. I wanted to catch the momentum while it was rising. What I didn't take into account was the fact that usually at open, people are going to ride that momentum, but then you're going to have people taking profits. So I should have waited for the first pullback, but I didn't. So I got in right here, about right here, and it dropped on me. I'm like, shit. So it dropped here, and it got to about, so I got in around 100.40, and then it dropped. Oh, look, it dropped all the way to 99.95. When it dropped here, and actually just to go back, so when I got in right here at 100.40, I had bought a one-on-one call, but then it dropped to 99. Here, once I saw that it start going back up, and it closed about right here, I had, before it had got to this 112, I saw it going back up. I had bought a $100 call. So now I got a $100 call, and I got a one-on-one call. All right. What I should have did was I should have waited for this pullback, and then right here, and this is why I took these lines out, because I only use it for day trading. So this is the 8 EMA, and this is the 21 EMA. So these EMA lines work as support levels when it's in an uptrend. Support level is an area that it will bounce from. I should have entered right here at the 99.75 when it bounced. This would have gave me a way better entry right here. Because actually, you know what? I didn't buy the 100 call right here. I bought the 100 call when it started rising on this third candle. So I bought the 100 candle. I bought the 100 call, and I'm already in a 1-on-1 call. So then you see it rose here. By the time it got to, let's see, this one hit 100.58, but this candle hit 100.64. I sold about 100.75.
Okay, so question with that, I know, like I said, with the break even, like you said, you did a 110, I think you said, call.
This
break-
is the day trading though. This is the day trading. So
Right, but you still day trading options, right?
right.
Right. So are you saying there's a difference with the break evens from a day trading in?
Yeah, because I'm kind of getting in and out. So the break even isn't gonna really affect me because I'm doing a quick scalp, right? So I bought my 100 call when it was at 90, like a 99.80, and then I bought a 1-on-1 call. So it had already started approaching those numbers, and I had sold. The only time that break even is going to affect me is if it was something I was holding throughout the day or holding overnight. But usually with these day trades, I'm in and out within a few minutes. So since I'm in and out within a few minutes, right, the break even isn't really going to affect me. Those only affects you when you hold it longer. You kind of get what I'm saying?
Yeah. So the break even is still there. It still would say, it needs to reach this amount. But if you are in it and out of it within a couple of minutes, so you would say what, less than an hour or?
Yeah, I'd say less than an hour, even if you held it for an entire day, right? As long as it's moving up, that's the whole key. You want to be in something that's trending up. That break even will affect you if it's like not really moving or if it's going backwards. That's when that break even is going to mess you up. All right. And another thing that will mess you up with these contracts is, and let's see, because somebody was talking to me about volume. You know what? I had a one-on-one with them. They're actually not on a call, but for the people learning about day trading, let me show you how the first 15 minutes of the market is like the most volatile time. It actually is more like the first 10 minutes. So like, let's look at, for example, Apple. All right. So you see here down below, these are the volume bars. You notice that this is 930 right here. This big 12 bar represents 930 when the market first opened. If you notice, the first 5 minutes of the day had the most volume. Then the next 5 minutes had the most volume. Now let's look at Monday. First 5 minutes had the most volume. Then the second, you had some volume right here, but usually the first 10 minutes. And actually, if you notice too, the first 10 minutes and then the last 10 minutes of the day. Same thing here. On the 10th, this is Friday. The first 10 minutes and then the last 10 minutes on Thursday. So it's like you have people trying to put in all these last minute orders and like before the market closed, then you got all these people who's been waiting all day for the market to open, who are buying as soon as the market opens. So when you have huge volatility like this at market open, and this is why I say if you're gonna buy a stock as soon as the market opens, like an option, you have to understand that when it's a lot of volume, it makes the option contract prices move faster because you have millions of, look at this one. You had 4.4 million people buying Apple as soon as the market opened. 4.9. So those contract prices will move fast. You might have a contract that goes from $1 to $2. So people making 100% returns in like literally 30 seconds. But just how fast they can go up, they can go back down. So as soon as that first 10 minutes is over and that volume starts getting slower, if your stock isn't moving up, your contract premium costs will kill your profits. It's called IV crush. So IV crush is implied volatility. Implied volatility is based on volume. So the more volume, right? The more volume, the more the IV will influence. The more the implied volatility will affect your premium, meaning it'll make it go up faster. But when that volume dies, and the volume gets low, like it does here, especially during the last, the middle of the day, it's called IV crush. The volume is dying. So your contract can go from you buy a contract at open for $2, right? And Apple's at 174, but then Apple can still be at 174, but then like 10 minutes later, 15 minutes later, just because volume is going down, that contract can go to 150. And you're like, how am I down? How am I down $50? And the contract is going, the price is going up because you bought it at a high time. You bought it when the volume was high. So you got to be playing at open, playing to get in and out. All right. So that's that. The other thing I just want to hit on is, if you're a day trader, you essentially want to be looking, just understand that they say 9:30 to 11 is like that best time frame to trade, right? That's when you have the most, like of course, like I just showed you, that first 10 minutes, you have the most volume and activity, but 9:30 to 11 is usually that best time frame to trade. Between that 11 to 2:30 time frame is considered like the lunchtime period. People taking breaks and you see lower volume, and then it starts picking up around that 2:30 to 4 o'clock range. Right? Me, I'm typically done trading every day before 10:30. So just wanted to throw that out there. Not saying that you can't find good setups during the day, but I'm just kind of breaking down like what they consider the best times to trade: 9:30 to 11, 2:30 to 4.
So with your CVS day trade option, what was the sell by date for that?
Oh, when I do day trades, I do weekly contracts.
Weekly.
So I have so all my day trades are weeklies. Even if I do a contract on Friday, it'll be a zero expiration date. I'm actually looking to potentially not do those, meaning that once I get to Friday, since it expires the same day, it's like a high risk, high reward play. I'm considering just doing the following Friday for contract. Let's see, I had a question about, can you go over Microsoft? I made some, but this money. Let's see. So you did Microsoft today? You can unmute yourself too, unless you can't talk right now. I understand.
Yeah, I did it today, but I caught it like at the end.
You did a put?
Yeah, I had to do that put.
So what's going on with this one? Yeah, so this one was pretty. I'm mad I missed this one myself, man. I mean, personally, I'm mad I missed this one.
For me, I think it was just because I'd be trying to like watch the value, so I'd be kind of sometimes getting thrown off because I'm trying to make sure, like you said, as far as like catching it and knowing for sure, like it's going down, like it's in a downtrend. And I, for whatever reason, I got thrown off. I don't know if it's because I was watching that and like NVIDIA and XLE.
Yeah.
Or what?
Yeah, I would say sometimes it's better to like just watch one, just find like one that you just want to watch, and then just go from there. Because I've been there too, where I've been trying to catch everything. I'm hopping from chart to chart to chart, and I didn't miss anything because I'm trying to find, you know what I'm saying, the best trade of the day. So when I just like narrowed it down, because like even for me, like my watch list. So usually I make a green list. So I got all these in here. So I got about like what 9 stocks. By the morning, it'll only be 4 stocks in here. Right. So now during the day, I'm just focusing on one. Right. So I'll just focus on one. I mean, I'll set alerts for these different ones, but actually like watching the chart, I'll just like look at one. For Microsoft, let's see. So this one, I mean, it's crazy just how things have been kind of trading recently. Looking at Microsoft, because we see here that they had a hard time breaking through this 339 price. It finally broke through, right? So we're looking at it to potentially test that 52-week high, and then it just drops. But once again, it's a lot of stuff going on in the market. We got that Federal Reserve meeting with Powell. You got people also rotating out of technology stocks into safer stocks. So you'll have people rotating out of technology stocks, and they'll rotate to different sectors. Like they'll rotate their money into like healthcare stocks. They'll put their money into safer, what people consider value stocks, like a Coca-Cola, something that doesn't really move. Like for example, let me go to Coke, for example, just to kind of show what I'm saying. Like Coca-Cola is considered like a value pick. Like it's not gonna blow you out the waters. Like this whole year, it went from $48 to $58. All right, this is considered a value pick. It's not really gonna move up too much, not gonna move down too much. Like people, actually, it's crazy I said that, because if you look at it, the whole market's been trending down. And look at Coca-Cola the last few days. It's been trending up. This is a perfect example of what I'm talking about. Like, so you look at Coca-Cola, but then you look at like, for example, this is technology. Technology is trending down. Meanwhile, Coca-Cola is trending up. This is what is called a sector rotation. All right. Sector rotation. So you got technology sector. You got the healthcare sector. You got the energy sector. You got the financial sector. Right. So they'll take money out the tech and they'll put it in a different sector of the stock market. Let me add Coca-Cola to my watch list. Also, the bank sector has been doing decent. Look, the bank sector was up today. Technology was down. Because I mean, just let us think about this for a second. If interest rates could potentially be going back up, who's that going to benefit? That's going to benefit the banks. The higher interest rates they can charge, the more money they're going to make. Right? So that's something to keep in mind too. Let me go back to Microsoft. So yeah, Microsoft is an interesting play, man. Honestly, looking at it, it's looking like it could bounce off this 50-day moving average.
A better way I should have said it was so like sometimes when I'm watching plays, like I can see like the 8 and the 21 cross, and let's just say it's going up. But then like it might, let's say we have one green bar, and that second one is above the 8 and the 21. But then like right when I'm about to get in, I might see it start going red for a second, or maybe like a 30 seconds or a minute. And then sometimes I doubt what I'm seeing and I don't do nothing. So, and I'll try and look at the volume to like verify, but I'll be like comparing the 5 and the 15. How do I know for sure? Like I'm getting enough volume to verify that it is finna still go up, or if it's going down, that it's still finna that it's still finna go back down, even though it's reversing a little bit.
So, but this one, if I would have played this at open, this is looking like a momentum trade. So if I didn't catch this initial move right here, so this first, all right, so we're looking at the 15-minute chart. Let's go to, I'm gonna go to the 5-minute chart first, then I'm gonna go back to the 15. So let me zoom in. So if I was looking at this chart today, I would have entered just because I see that it's rising volume right here. This is key right here. You see rising volume, so it's trending down and it's more sellers coming in. I would have been looking to enter. All right. So that's something you can use. So I would use momentum. So when I say momentum, you're using the fact that the volume is rising. That's a good indicator that you can hop in. If you miss that, if you miss this rise right here and say you got in right here, I wouldn't enter right here because it's like, if you see it moving sideways like this, it's consolidating. So when it's consolidating, it's looking for some direction, right? It's looking for some direction. So what you could have used right here is, once you see that it's bouncing like this, because remember on the downtrend, the 8 EMA is going to be used as resistance. Once I see that it's resisting this 8 EMA, like it's hitting it and it's bouncing back, this could be a good entry right here. Plus volume, once again, is look, volume is rising. So I would have been looking at those two things. So I'd have been looking for volume to rise. Now, if I would have saw volume decreasing, I probably wouldn't have entered that. I would have been kind of skeptical that it could be looking to reverse. Because like right here, it's kind of dead. You see right here, once it got to this part, that 1120 mark, it kind of is like just moving sideways. So if you missed that initial move down, I want to enter. But those are things I would have been looking for in like the 15-minute chart. You got these big bars, so it's kind of like you want to just take advantage of the momentum. Right? And the farther away it is from this 8 EMA, we're looking at the 15-minute now. It's kind of more confirmed that it's going to be trending down. Let me zoom out some more. 4 hour. Let me go to the 1 day. Yeah, so, man, this is a huge gap right here, man. Jesus. So yeah, use volume. Do you remember what time of the day it was that you was looking at it? Was it at open?
Let me check, but no, it was a little bit after open.
Was it after 10?
Yeah. Yeah, oh damn. So I got in at like 9:52 Chicago time. So that's like what, 10:52 market time?
Oh yeah, so yeah, you got in kind of around that time. Look, this is where you was looking at it right here. I would have been hesitant too. Because it's honestly right here, the move was already missed. So I could see the hesitation.
Yeah, for that one, I just got in, and as soon as I was in profit, I just got out.
Of course, we're looking at it after the fact, you know what I'm saying? So it's easier to say that. You know what I'm saying?
Yeah, Nvidia be doing that to me. Like sometimes I see that and then I just get out, take profits, or just get out and take the loss if I'm losing. And then I'll check it like 3 hours later, and then next thing I know, it's like, damn, I should have stayed in it because it then went up another $400 or $300 or whatever.
Let's see. So what's the indicator for MA50? So I just go here to indicators, and it's called moving average. This one right here. So the moving average, this is essentially the average movement of the stock over the last 50 days. All right. So this can be used as a support level, right? When that 50 is broke, that can be looked at as a potential entry. for a stock as well. So the 50 moving average is a definitely a good indicator to use for entries. And when the stock is in an uptrend, it can be used as support. So you see here, December 3rd, it bounced off that 50 and start going back up. So it's going to be big to see what happens tomorrow. I'm gonna be curious to see if it trends up from that 50 or if it breaks it, because if it breaks it, it could be potentially going back down to that 305. That 305 range has served as support. Let's see. So for volume, you just go to this FX part, and then you just type in volume, and I use this one right here. So you're gonna see all these different volumes, but I just use this one, regular volume chart. There. Trying to think, it was. Let's see. Yeah. So the last thing I want to cover, and this is for something that I want you all to just kind of practice with in your paper trading. So let me actually go out of here and cancel. So options, stop losses. So for example, a stop loss that you can use is something called a trail stop. So you see what the trail stop is? If you will say, for example, you had one contract in for, we were looking at CVS. You had one contract in. Let's do the $99 strike price. How this trailing stop works, if this limit price loses 10, like 0.10 decimal points, it'll automatically sell it for you. Or you can make it 0.5. It'll automatically sell. So if the ask is 0.83, once it goes to 0.78, it'll sell. But check this, it's a trailing stop loss. So if it goes, say you're making money now, right? Say it's going up. So say CVS goes from, it's at $98, you got a $99 strike. Say the ask grows up to $1. This trailing stop follow the ask price. So now it'll sell it if it goes to 0.95. So the stop loss goes up. So while you're making money, the trail loss is updating based on where the ask is. Y'all kind of get what I'm saying? That makes sense. It's trailing it. So picture, you think of a trail, somebody's following you. So the limit, the stop loss is going to follow you. So say, for example, you was up $300. You can put that trail loss in. So say you up 300, right? But you want to see if the stock can go up some. You can put that trail loss in. So if it goes from 300 to 290, it'll automatically sell. So you're kind of locking in profits, but you're not losing too much, because I've had it happen where I'm up 300, then I'm only up 100. This trail loss, and the only reason that happened is because I thought it'd go up some more. So once you kind of get to your profit target, so say your profit target every day is $200. Once you get to your $200 profit, right, you can go to, what you would do is you would click on the option. So say I'm up 200, I would go to close selected. I would put in a trail stop. And then I would say, all right, if this boy lose $10, sell, right? Because I'm already at my profit target. But if it goes up, now you can make more profit, and you're not risking what you already made. All right. So I want y'all to practice with that in the paper money, just so you can kind of see how it works. But this is a good way to protect your profit. All right. Now, if the stock drop overnight, and this is usually something I use for day trading, right? This is something I use for day trading. You could use it for leaps as well. But you know what I'm saying? Like, only thing I'm gonna say with the leaps is, right, if it drop overnight, it can skip past that stop loss. All right. But if you in a day trade, you hit your profit target, you up 300, put in that trail stop, you essentially locking in your profits. You won't lose too much of what you already won, but you could potentially make more. That makes sense. So let me see. Yeah, that's so you see here, look, December 17th, 0.10. So when this mark gets to 0.10, it will automatically sell. But if this mark went to 0.30, then this will update and change to 0.20. That's what I'm saying. If this goes all the way up to 100 or 1.00, this would change to 0.90. So, all right, that's all I have. Any more questions before we wrap it up? All right. Well, you all have a good night. Be on the lookout for the stock market and cryptocurrency Q&A. Kenan has been out of town, our crypto guy. So, yeah, be on the lookout for that. But no more questions. You all have a good night. And yeah, let's get this money.